is this a safe place for me to put my money, right? Are they going to be around the next 5 to 10 years? Saxo's been around for 30 years, and we plan to be around for at least another 30 more. One of the feedback that we've got from sites exactly like yourselves, but also from the industry, is it does feel like a trader setup. For many who are starting their investing journey, that's a little bit confronting. At the end of this month, we're launching our new investor platform in the UK. It's very intuitive. It's very easily accessible for anyone who hasn't really started their investing journey. We cut prices earlier this year before I joined in a very significant way. And that was across all of Saxo and all of our geographies, and very meaningfully here in the UK. That message has really resonated with the investor universe.
Welcome to Good Money Guide. Today we're joined by the new UK CEO of Saxo, Andrew Bresler. Thank you very much for joining us.
Thank you, Richard. It's very good to be here.
Excellent. Well, Andrew's actually the third UK Saxo CEO we've interviewed, so we're going to have a chat about the new goings on at Saxo, their approach to investing, what's happened over the last few years, and we're going to find out a little bit more about Andrew and how he likes to invest.
Awesome. Look forward to it.
Just the obligatory risk warning. Obviously, everything you're hearing is opinion. None of this is financial advice. Make sure you don't trade or invest with money you can't afford to lose. So, Andrew, how are things going at Saxo?
It's a very exciting time for us at the moment. We have really doubled down on our focus on the investor client base, and we're starting to see a lot of traction in that space. So there's a lot going on. We're very, very busy at sort of executing on that. And we've got a lot of cool things coming up in the next quarter, most specifically our new investor platform launch, which speaks to those persona clients. So a busy period, an exciting one.
Excellent, excellent. Well, we'll get onto the investing in a minute, but you are, so 3 months into the job, but you're alumni, aren't you? This isn't your first time at Saxo. You've been with the business before.
That's right. I did a couple of years stint in Singapore as one of the global sales trading team. That's a team that sort of is almost like your voice stealing of the old days. That was a fun time. But now here I'm back in the UK, happy to be back and settled here.
Yeah, you don't see much of the voice stealing anymore, do you?
No.
You were saying earlier 99% is online.
Yeah, I'd say it's probably even north of that. So very much digital platform first.
Okay. So let's get into the changes at Saxo. Saxo's always been traditionally a trading platform that's catered to high net worth individuals, professionals and institutional customers. But now you're moving more into the investing space. Why is that? Is that your remit as you've come in, or is that just the way the business is going?
I think you're right. So we've historically been very well known at really servicing that specialist type trader, right? And that's because of breadth of product, rich functionality in the platform. It's really been targeted at that, and we've always really gone after that in the market, and it's kind of been our bread and butter for the last couple of years. But over the course of the probably last year and a half, we've made a very strong push into the investor space, right? And that's driven by a couple of things. Firstly, that's kind of the way the market is going. So if you look at the number of trading clients today, what you see across the industry as a trend is a relatively stable base of consistent sort of happy trading clients, a declining number of new clients that are coming and trading sort of more of your leverage products, and then a declining number of that reactivation of your dormant clients, right? And so there is a general trend, I think, of trading clients sort of becoming less like traders and maybe more like investors. Now, part of that I think is driven by regulation. So consumer duty at its core is all about really good outcomes. And I think you can see on anyone, ours as well's website, where it comes to leverage products, that doesn't necessarily incentivize the best type of outcomes. And so regulation is moving in the direction to try and potentially restrict some of that for a large portion of the population that aren't really ready to trade those types of products. So that's been a significant change. Then there's an education component. People are increasingly becoming more financially literate, understanding the risks that are associated with some of those types of products, and so maybe shy away a little bit from some of them. So I think that's a bit of a broader trend. And so ultimately, I think the move towards that is both regulatory driven. It is also sort of a trend within the industry because of education. And then I think the final piece of that puzzle, it just makes commercial sense, because what it really does is align both our interest and the investor or the client's interest, right? And that is long-term, happy relationships where we grow together. We have a share of wallet with you that we hopefully increase. You build your overall net wealth and ultimately get to a place of financial freedom. And I think that is a place that everyone can get behind. And so that's why it's a real focus for us.
Yeah, it's always been one of the problems with running a trading platform or a brokerage that deals in high risk products, isn't it? Is that there's a lot of people doing it that probably shouldn't be doing it. We were discussing earlier that the market for active traders is actually quite small.
Yeah.
The long-term traders that are both profitable for themselves and brokers, whereas a huge percentage of that market shouldn't be doing it, don't know what they're doing, and should actually be investing anyway.
Yeah, spot on. Ultimately, you want the right outcomes, as does the regulator, for your consumer. And that segment of clients who trade in those products without the knowledge of the risk that they are taking, the vast majority of them across the industry ultimately burn out. Now, that's bad business for us because they don't continue to generate sort of the revenue that we want, but it's a really bad outcome for the client as well. And so aligning both of our interests, that's kind of core to our principles.
Okay. And what does your customer base look like at the moment? Is it gradually transitioning into investors anyway, or are you ushering them in that direction?
Well, I think so. We cut prices earlier this year before I joined in a very significant way, and that was across all of Saxo and all of our geographies, and very meaningfully here in the UK. That message has really resonated with the investor universe, and so what that's meant is we've seen a fairly rapid transformation from being more trader heavy into more investor heavy. So north of 80% of our client base today would be classified as an investor persona within our universe. Now, we've historically appealed to, maybe because of some of the prestige within our brand, maybe because of our Danish heritage, but we've appealed to sort of your and my age group a little bit more and above. That's not to say we exclude the younger generation. We have seen more younger generation come in, particularly enticed by the lower pricing that we now offer. But the lion's share of our population today remains unfortunately male, but middle and older men who are more classified as your investor universe. Now, we kind of bifurcate your investor universe into kind of two buckets of those. So we think of those as your traditional just buy and hold. They hold a handful of stocks and they kind of watch those grow. And then we think of your, what I would call as sort of active investors, right? Those that have a well-diversified multi-asset portfolio of predominantly cash products who tend to really actually do well. They're the best type of client for us. Now, we have seen in that particular segment, based on the pricing and the push that we're doing, about a 35% growth year on year in that segment. So that's proof that the concept of working in terms of moving into that space. It's also fantastic for us because those clients traditionally have a way better outcome. So your more diversified clients, those that have 3 or more products, are typically outperforming all the rest of our client base who have just 1 or 2.
When you say products, are you talking about equities, bonds?
Yeah, so asset classes. Yeah, exactly right. So if you've got an ETF and you've got an equity and maybe you've got some bond exposure in there, one, your performance is better, both in sort of ultimate alpha returns, but also in downside risk management, you're seeing a lot better outcomes for that. So your guys that are heavily concentrated in single securities, like all the favorites at the moment, they are experiencing a lot more volatility than those that are more multi-asset. It's really a win-win for us when you become an active investor for us. The client is having better outcomes, but so are we, right? Those clients tend to bring more wallet share to us. They tend to spend more with us as they trade in more products, and they're growing their wealth as well. So it's a perfect setup for us, and we're really seeing the proof in the pudding of that. We're still very heavily domiciled within London, so the vast majority of our clients come within the inside the M25. But that's not to say we don't attract clients from all over the UK.
Okay, and you mentioned mainly looking after people like us, but obviously, the world is about diversification as well as investing. So, what are you guys doing to grab more, or rather appeal more to early stage investors, different sorts of investors, and also compete with these new breeds of this new breed of zero cost platform that almost have a sort of cult-like status among their users?
Yeah, I think there's probably 2 parts to that, right? And we'll sort of take them separately. So in terms of appealing to either that sort of new breed or young up and coming investors, or even older ones, one of the feedback that we've got from sites exactly like yourselves, but also from the industry is, and as you started this, our offering has been very much focused on that trader persona. So it does feel like a trader setup when you first log into it. You've got all your watch lists, you've got your exhaustive charting features, you've got everything you need to be a really active trader. Now, for many who are starting their investing journey, that's a little bit confronting. And so at the end of this month, we're launching our new investor platform in the UK. That is all of the richness from a product perspective that you would expect to get, so you can build a beautiful multi-asset portfolio. But it's really, really simplified. So it's very intuitive. It's very easily accessible for anyone who hasn't really started their investing journey and doesn't need to be in there on a day-to-day basis. And so we're super excited about that. So we can appeal to them both in sort of a user experience format that we've never been able to do before. Then the second part of it is that sort of the zero cost component. For me, there's no such thing as a free lunch, right? And so you are paying fees in some way, shape or form. Even though you may not be paying $0 on the execution of that security, are you comfortable that you're not paying high fees in terms of your FX conversion charges? Are you comfortable you're not paying high custody fees? Are you comfortable, for example, that you're not paying for that flow to be booked potentially, right? So there's no such thing as a free lunch in there. And so I think we compete because our prices are very, very sharp across all of the asset classes. I think genuinely you would be hard pressed to find a broker where you can build a fantastic diversified multi-asset portfolio across the swathe of products at the price point that we're able to offer it. And so that's a compelling proposition. Really simple user experience with really good pricing across a multi-asset platform. I do think we're really sort of best in class there.
So that moves us quite nicely on to the next question, is what do you think people should be looking for in their broker or investment platform? Let's look at high worth individuals and those just getting started. Or even if is it the same thing?
Yeah, I mean, I would argue that's probably the same thing, right? As a starting point, is this a safe place for me to put my money, right? Are they going to be around the next 5 to 10 years? Saxo's been around for 30 years, just north of, and we plan to be around for at least another 30 more. So we are very heavily regulated. We meet all the right obligations there. So, is this a safe place for me to put my money? 2 is this a place where I can grow my money? That means I don't just get a single asset class offering. I get multi-asset class offering, so that as I grow from being comfortable investing in just, for example, a stock, I'm now able to learn about investing in ETF or funds or bonds or whatever other asset class you'd like to do, and grow both your knowledge base and your experience and your investing capabilities, right? I think we do that very well. And many of our competitors that are really sharp or zero cost in one space, they tend to only really offer that single vertical. And so I think that's a compelling proposition, right? So that's product. Then it's pricing, right? Am I being charged in a fair way for what I'm accessing? And you need to know what that looks like. And I think what we've done with our pricing cuts really speaks to the idea that now we have a very sharp set of pricing for that multi-asset portfolio, which I talked about. So those are kind of your hygiene entry factors, right? There's stability of the platform. That's another hygiene one. We have amazing uptime of our platform. So you know that in the most volatile market circumstances, I can access it and make a decision on the fly. But then there's that sort of, that's all that sort of, as you would say, we all sell biscuits in some way, shape or form. Those are table stakes. And so you kind of go through that checklist to say, well, let's whittle out the chaff from the chaff. Then there's the component of, well, what is it that's really like your unique USP? Right? I think what we do in terms of inspiration to you within the market is probably second to none. So we have amazing inspiration in terms of thematic baskets that you can find. Any way that you want to find anything that you want to find to sort of self-direct your investing, there's a toolkit to enable you to do that. And again, this crosses all of your asset classes. So we're probably best in class from an asset class perspective, and we do a really good job of helping you find that investment. So if you're a high net worth individual or you're a just getting started, I think your entry criteria are the same. We see the problem statement all the time where people arrive, they've gone through the onboarding flow, they've submitted their source of funds, etc., and they're now ready to go, and they arrive on the platform, they don't know what to do. And so they invariably either gravitate to where there's high concentration, you take on more risk, or they come to us and they're able to see all these amazing things that you can learn to trade and learn to understand different products, etc., and get the inspiration that you need.
Okay. Is there an asset class that's become particularly popular recently that's surprised you?
I think what has surprised me is the decline in CFD a little bit. As I said, that keeps getting concentrated in a certain area. We know that this year we have some of the most concentrated equity markets in history. It's frighteningly concentrated. So that continues to surprise me because people are still very comfortable in chasing those really high valuation stocks that have performed, right? But they take on a lot of volatility. I think the one product, particularly if you're thinking about high net worth individuals, that continues to surprise is the investment within the bond space. So that adding that diversification into your portfolio and the ability to do that electronically in smaller clip sizes, that's a really cool piece of kit that's starting to grow and grow in its attention.
Yeah, I do remember your bond offering, actually, from when I had a white label. I think you've got one of the broadest access to the bonds market of everyone. You could pretty much invest in anything you wanted.
That's right. I think we're probably unrivaled in it. And not only that, we do have the ability to do some of that offline as well. So you can access a huge amount digitally, but you can access even more through our global sales trade.
Particularly in bonds, because there's a lot of high minimum denomination bonds that have very attractive yields, but are really difficult to trade online. How do you deal with that? Is that can you trade those online, or do you have to phone someone up? Can you do it the old-fashioned way if it's a thin market?
Look, we still offer that, but I wouldn't say that that's a service that we look to offer in great quantums, right? That's not really a scalable solution. Ultimately, our motto is digital platform first, and so we're increasingly trying to put more bonds on the platform that you can trade electronically and really drive clients to be able to execute digitally in that space.
Well, let's find out a little bit more about you and your background and where you're hoping to take the business. So how did you get started in finance? What was your first brokerage experience?
So I've been in sort of brokerage, wealth management, finance for 20 plus years now. I had a few odds and sods to get started, but my real first gig was I was an FX trader back in the heydays of pre-global financial crisis. I did that both here and in Hong Kong and then here again. As I said to you earlier, that was a fantastically fun time, but also a young person's gain. And I think if I was to be honest about it, probably wasn't exactly my art form. I was okay, but not probably the best at it. After that, I sort of left the hedge fund industry, and that was my time at Saxo, where I was in sales trading. I absolutely loved that job. Sales trading must be one of the funnest jobs around because you are right at the sharp point of what's going on in financial markets. You're speaking to, particularly in our space, we have a huge swathe of very interesting clients, whether they be family offices, hedge funds, fintechs, white label solutions. Like, you get to cover the whole gambit of it. And at the end of the day, you go home with a flat risk book, and you can sleep easy at night. So the combination of that is great. I left that and I went to sort of a US bank where I ran retail brokerage for them across Asia and Europe. And that was really fun. You learned a lot about sort of at scale brokerage and some of the inefficiencies that are there. And then I spent some time in the tech industry as well.
Okay. So 20 years in the business. Obviously, in the business, working for a broker, you can't trade and invest as much as you'd like because of various compliance reasons. But over the last 2 decades, do you remember your best and worst investments? I always think this is a fun question.
Yeah, I mean, I'd say tragically, I have a lot more worst investments than best. And I'd probably say that has led me to be a fairly boring investor.
Do you think this is how everybody starts? Everybody cuts their teeth on trading,
yeah,
and then eventually grows up and says, "Well,
I think that's it." I mean, ultimately, if you ask me for a piece of advice as to what's the one thing you shouldn't do, is really there are no, particularly in financial markets, get rich quick schemes, and I have tried a few of them. They would be my worst. So whether that be penny mining stocks or unknown crypto coins, I've had a go at them, and they've never really worked out very well. They're certainly volatile experiences. So those are some of my worst. I think some of my best, as I said, I've become very, very boring. So I'm just a happy, passive ETF portfolio now. I would sort of turn around and say maybe it's not your classic investing, but I do think one of the things that I've tried to invest in myself a lot over the years is education. So I'm constantly doing courses and learning more. And that has been incredibly valuable because it helps maybe accelerate your maturity and then ultimately make better decisions on investing.
Sure. I think education's great, but I do think you need that experience of loss in some way to realise that there are no shortcuts in this world.
Unequivocally. I mean, if you want that experience, I'd sort of recommend trading penny mining stocks as a way to really gain that experience.
Do you know what I used to love the penny the mining stocks. We used to do a few IPOs of them when I was a stockbroker. I remember we had one where the guys came in, they were raising some money to come to the AIM market. It's it was a fairly standard MO. They just come in and go, look, we need to raise 30 million quid. We're going to dig a hole in the ground. If we find oil, it's going to be a 10, 20 bagger. If we don't, it's going to go bust. And that was generally the way it works. But you'd have some really flash guys that would come in and go, yeah, we're going to mine for gold, and like throw some gold nuggets on the table and go, sprinkle these all over the all over the site before.
Well, I think my story was along the lines of a potash mining company, which I don't even know what potash is, but I thought that was the opportunity that I needed, and so it turned out it wasn't. But so I think I've had the school of hard knocks on that one, and so I'll go back to education and long-term investing.
So that's what's not to do. If there's one tip you could give investors that you think would make them better at what they do, or one thing that Saxo offers that you think would really appeal to investors, what would it be?
I mean, I'm going to sound like a broken record on this, but diversification, taking advantage of multi-asset, it is genuinely true that our best performing clients are the ones that are more diversified. And so be smart about that. Make sure you've got the right exposure to multiple geographies, multiple asset classes, multiple security types, and the outcome will be riding the tougher storms a lot more smoothly, and ultimately better returns for your portfolio. And I think I have this view of what we do is really genuinely about building financial freedom, and the pathway to doing that is not potash mining penny stocks. It is good diversified portfolios where you really put some thought into it. I think the vast majority of retail investors don't spend enough time thinking about what they're investing in. They will read a newspaper article and happily put some of their hard-earned dollars into that. And if you take the time on a weekend to spend an hour or so learning about it and educating yourself, you will probably make infinitely better decisions. And so that would be probably my guide.
Okay. Leading on from education, we always ask for a book recommendation that whether or not it's helped you personally or you think this can really explain to investors what's behind the curtain. Do you have a book that you think people should read that can make them better investors?
I would say maybe not better investors, but better thinkers. So it's slightly corporate, but I've just finished reading for multiple times Satya Nadella's Hit Refresh book. So he wrote that I think it was about a year or two after he took over Microsoft, and sort of the refresh that he's done on the culture there. It's deeply personal because he goes into a lot of his sort of family and the death of his son, but it's incredibly inspirational in terms of being a good leader, enacting change and culture. And it certainly allowed me to take stock of who I am and think about how, one, I act on a day-to-day basis within the office, but also how I act on a day-to-day basis in life. And ultimately, I think if you're happy in both of those components, you're going to be a better investor and more comfortable with who you are. You're not trying to be someone else.
Excellent. Well, Andrew, thank you very much for talking to us.
It's been awesome. Thank you very much for having me.
Excellent.